we're dropping prices dramatically, giving people 30 to 40% discounts for 14-week stays. Some unique things we're doing that you could potentially do are reaching out directly to hospitals and saying, hey, if you have people that need help with quarantine, if you have extra traveling nurses, we want to provide that service for you.
This is episode number 54 of the Short-Term Rental Success Stories podcast. Are you an investor that's looking to have your home professionally managed? Go to cohostit.com for more information. Welcome back to Short-Term Rental Success Stories. I'm your host, Julian Sage. This is a show where I talk to hosts about their journeys in starting and growing their short-term rental business. My goal is that you'll be able to walk away with practical information that'll help you become a better host and learn how to scale your business. Like any exceptional host, we all strive for 5-star reviews, so please go on over to iTunes and let us know what you enjoy, as it really helps support the show. If you haven't done so already, go on over to our Facebook group, The Host Nation, to connect with the community. Hey, what is going on, Host Nation? I'm super excited to be back again with you this week. So there's been a lot happening in the short-term rental space with Airbnb making these new announcements and their 4-step action plan, which is something that we've covered on the Vacation Rental Machine podcast. So if you haven't checked that episode out where we cover everything, going over what Brian Chesky shared with us for his 4 steps of action to be able to help alleviate hosts that were affected. It's definitely an interesting listen. This is definitely something that you do want to find more information about, as it can seriously impact your business. There's also a lot of information coming out for small businesses in regards to grants and funding, loans to be able to help hosts out. The SBA is coming out with a lot of resources for hosts to be able to utilize, such as the COVID-19 bill. There's the EIDL loan, as well as the PPP, and all these different loan programs that are coming out to be able to help either pay for employees or some type of grant or a loan to be able to allow you to keep operating your business. Again, go on over to the Vacation Rental Machine podcast to be able to keep up to date with John and I as we are covering this information as it's coming out. I want to say thank you to all the hosts that have been super supportive and recognizing that I've been a little bit stressed out. I sent out an email the other week, just being honest and saying, I've been burnt out. I've been going really, really hard for the past year, the past 52 episodes, and it was just like exactly at 1 year, it was just like boom, all hell breaks loose. But I'm doing okay, and I thank you for everybody for your kind messages and emails and comments. So every day I was just waking up just super excited because I knew okay, we're getting there, we're moving forward, we're progressing. So now just to be able to stop and reflect and not so much think about, what's the next thing that we can be doing? How can we, make this next move? And now it's more like, well, how can we help the people that are hurting? It's times like this that we have to do a lot more reflecting and looking introspectively. And I've been doing that myself. Like how I always end every episode, we have to keep on hosting. I'm in this for the long haul, and I don't plan on going anywhere for a long, long time. And even though every day is not going to be just, constant progression and strides moving forward, it's just the simple act of doing and keeping on hosting. And that's why I'm really grateful for our guest today, Jeremy Schmitt. Jeremy was a previous guest on the show, and he's come back to be able to share his 7 steps to survive a pandemic, survive this type of situation. We also talk about the state of rental arbitrage and what Jeremy is seeing from these companies like Sonder, Lyric, and Vacasa, all these big companies that are just really focused on picking up more units and what that means for rental arbitrage. A lot of people have been really bad talking about rental arbitrage model, which I honestly believe is really just coming from the people that did not like the model and don't like people that are teaching how to do it. It is a model that is here to stay. There's companies that are really doing well off of it. But again, it's like any other business. It would be the same if you own property. But again, we covered, is rental arbitrage dead? Is it something that's sustainable in the Vacation Rental Machine podcast? So if you'd like to hear John and I's perspective on that model, as my partner John has over 24 properties being rental arbitrage, and then another 10 or so being co-host, and a few that he owns, really utilizing this whole model that we call the RCB, the rental arbitrage co-host buy and hold models, and how using all 3 can really help diversify your portfolio and allow you to be able to scale exponentially. Again, this is a really great episode that can talk about some of the different pivots that you can do in your own business. If you like my show notes for this episode, go to shorttermsage.com/STR54, or if you like my show notes sent directly to your inbox every week, then go to shorttermsage.com/show notes. With all that being said, on to this week's conversation. Hey, welcome back, Host Nation, to another episode of Short-Term Mental Success Stories. In this episode, we have the special honor of bringing back a previous guest from episode number 27. So that was nearly, that was 25 weeks ago when we first started the show. That was our midway point. So I'm really excited to be talking to Jeremy again and seeing where his business, was then, where it is now, and also what he's doing during these uncertain times and how he's handling this, as well as a really awesome free resource that Jeremy put together for the Host Nation community and for all the hosts that are looking to, just get some more information on what they can be doing. So I'm really excited to have Jeremy back on. Jeremy, if you could please give a little brief introduction about who you are. For those of you that haven't listened to that episode, again, go back to STR, go to shorttermsage.com/STR27 to listen to Jeremy's episode. But Jeremy, please, reintroduce yourself and let's talk about where you are now.
Thanks, Julian. Thanks for having me on too, again. So our business, I have a little company. It's called the Passion Group. I had it since we last spoke. And since we last spoke, actually, we've rebranded our Chicago portfolio to be called Chicago Residence Club because we wanted to be more local, partner with more local business. We've also expanded to Palm Beach just to offset the seasonality of Chicago. And it's been really good for us right now in these uncertain times. So since we last talked, we talked about going from 0 to 50, and we've continued to grow, but we've grown very, very objectively and very based on data. We've seen the VC players come in here, and I've talked to a number of people. The Sonders, the Stay Alfreds, these people coming into these metropolitan cities like Chicago. And flooding the market with supply. And, in talking to the local brokerage community, talking to these developers that we have relations with, we know that they're just making deals that don't quite make sense. Where we pay, their model's master lease for people who don't know, where we pay maybe $1,700 to $2,000 for a one bed. They're paying $3,000 for a one bed. And they're doing this for one of their deals, actually. One of my friends was a part of it. They even have to pay the taxes, which the city taxes in Chicago are enormous. So we just started seeing that about 6 months ago, and we knew just like this is not sustainable. It's okay during good times, but we've been in an extended bull market. We've been at the 8th inning for a long time, and Corona was kind of that last strikeout. Okay, we're entering the 9th. Maybe we're finally, going to be entering this kind of recession area. So for us, during that whole time, our big focus was, one, building up a stock of cash to be ready for this. So, our business, we always require at least 2 months cash reserves. Ideally, we have up to 6. For us, it was a little tough just because we just got out of winter time. So January and February historically is where people lose the most money in Chicago. So it was not good timing because the Corona stuff happened like the 1st of March and hurt us. St. Patty's Day is a big day, and we could have done much better. But putting that cash stock away was really important for us. Secondly, we went out and really seeked strategic capital partners. So for our deals, we don't really take on many clients. We have 2 really large clients who we take on really to mitigate our risk. So, okay, we master lease and spend X amount. We want to have, maybe a 1/4 to a 1/3 of that revenue coming from, the management side of the business because there's no risk there. We're not going to be making as much in these uncertain times, but because we have an airtight, management system, we're able to make money with a lower risk profile. So we've built that into our portfolio as well since the last time we've talked. And then as I spoke, Palm Beach has actually been really good for us in these uncertain times because people are trying to get out of New York, trying to get out of Chicago, and get to more remote location. So having those units down there, has really helped us during those uncertain times. But a lot like everybody else, they've probably watched other episodes on YouTube or the Airbnb Automated guys. We're dropping prices dramatically, giving people 30 to 40% discounts for 14-week stays. Some unique things we're doing that you could potentially do are reaching out directly to hospitals and saying, hey, if you have um, people that need help with quarantine, if you have extra traveling nurses, we want to provide that service for you. I'm also part of kind of a national network of short-term rental operators, and we've created two brands to kind of help those stranded travelers and also these hospital stays, just because the hospitals are getting overrun. We're also putting our stuff on Zillow, so that distributes to Trulia, Hotpads, Zillow, Craigslist, and then Facebook Marketplace. Just to expand the reach. And the more we've done it, the more we see it's like, hey, this should be a continual process through our bookings. We might not make as much money through the summertime where we make 2x, 3x money, but if we can make 1.5 to 2 with longer term rentals, it's easier for our operations and cleaners. And it really decreases the risk when things happen, when things hit the wall. And things are happening now. And one of our top competitors is really struggling, seems to be going under. A few other people have just kind of given up on it in the market. So me and my team, we just decided, hey, let's create a resource. So maybe it doesn't help now because we're already in that uncertain time. But if you're in this business for the long term and you see the true value, let's start building the business the right way and make it foolproof moving forward. That's what we've done with our business. As I said earlier, we've slowly grown our units objectively. We could probably be at 100 units right now, no problem. But we're happy at our amount just because we know we've made great deals and we know we have the right systems and partners in place to take care of that. So we wanted to share kind of from our standpoint, how we're surviving this when most aren't. So we created kind of a 7-part series that we look forward to sharing with your group and your nation.
Yeah, thank you so much, Jeremy. I think what you said about the finding the counter seasons is something that's really smart from a manager perspective. A lot of managers, they might just focus on a particular area, but let's say like you said, everybody's moving from those highly dense populated areas down to the more set apart areas like Florida, for those properties in the Chicago, New York area where people, you're finding those vacancies. Like you said, what one of the things that you said that you're doing is you're listing them on long-term rental sites. Are there any other pivots that you're doing right now in your portfolio, and especially because you're working with investors? So are your investors expecting certain things, or what are you doing to be able to work with them?
Yes. So this is actually one of the parts in our ebook is um, have strategic capital partners. Um, and the really important aspect of this is, strategic capital partners who understand our business. Like our business is real estate, but it's not. It's a hotel asset. It's a hospitality asset. So for us, all of our partners understand this, and they know when times get bad, they get bad quickly. But if we can survive, and we have the right buffers in place, we're not only going to be able to survive this, we're going to be able to work with our capital partners to start to pick up other units. So we've gotten contacted by 2, 3 other groups to take over their portfolios right now, and some of them are a fit, some of them are not a fit. But that's really what's important, in terms of us and working with our partners. In terms of pivots, it's just a matter of having open communication. That's what our business is in hospitality. It's communication and providing a good service. So talking to the landlord, saying, hey, this is going on. New York, LA, Chicago hasn't really, but they're halting evictions, which we think it might have been smarter to just defer rent payments because people are just going to cry wolf and say they don't have the money. But it's just having conversations with them, saying, hey, this is where we are now. We have reserves and we're going to stay alive. We're not going to default on you. We're here to be your partners in the long term. What can we do to ease this burden? Can we defer the rent for 30 days? Can we defer the utility? Can we talk to your your partners, your investors, even your tenants to see, hey, can we provide an extra service for your building, in case families need to be together. So those are the small pivots that we've been doing. But that's why, I sold my former company. We started this, having the right partners who really understood this or being in it for the long run, is invaluable, because anybody can do this when it's good and you're making, anybody. It's very easy. There's low barriers to entry. It's very simple. But you can really differentiate the professionals from the amateurs in times like these. And that goes for, your capital partners too. So our capital partners are understanding, our investors are understanding. Nobody's happy, but you just have to have that conversation and say, hey, these are bad times for everybody. In Chicago, the market occupancy is about 9%, when right now it should be closer to 40%, and our units are typically this time, anywhere from 70 to 90% occupied in this low shoulder season. But it's tough, you got to bite it, and you got to be ready for, the waters to calm, which is why we're thankful to have, those capital partners.
Jeremy, I really appreciate your stance on where you are and how you're communicating. You're very reserved, very leveled during these uncertain times. A lot of people are freaking out, a lot of people are scared, but you're coming at this from you have to be the person that has to be confident, and you have to be the person that is helping these investors, these capital partners feel like they're secure. You can't be the one that's freaking out and saying like, we don't know what to do. We're just slashing prices. This is really bad. So I think even just your mindset, is the really important, and where you're coming from. So I hope that everybody that's listening to this can see, how Jeremy is, the way that he's communicating, the way that he's, talking about the numbers, talking about the facts, and just saying this is what it is. And, this is what we're doing. I think that just that alone is really powerful. So I want to, definitely talk about what are these steps that you wanted to share. If we could kind of highlight what it is, and then if anybody wants to get a little bit more detail, they can get this free ebook. Hey, it's Julian again. Have you ever thought about buying or selling a short-term rental business? STRbroker.com allows you to list one property, 10, or even 100. If you're an investor that's looking to get into the space and you're looking to pick up properties, or maybe you're someone that's already been in the space for a while and you're looking to sell, for more information, go to STRbroker.com to list your business. Now, onto the show.
Yeah, that sounds great. I won't go into too much detail, or I'll try not to. So we broke it down into 7 steps. And it's really just thinking about your overall business. And beautiful thing about these downtimes when it's so slow is that you actually have time to think about it and work on it, because, your operations are slower. So number 1, we just say run a light and tight ship. So by light, we mean we want to systemize your operations as much as possible. So, optimize your cleaning systems, optimize your channel managers, optimize your distribution. We're lucky that, this is a repeatable business. So 80% of the stuff can be systemized. And the tight aspect of it is playing with A players. So, when it's light and it's tight, rather than just one manager only being able to take care of, say, 15, 20 properties, he can do 40. So, and he has that buffer in times like these that, he feels like he still has room to maneuver. And you don't necessarily have to, let them go, because, you're running on a very light and tight ship. So that's really the important thing. We ask, like, what are the 80% of operations that can be automated and optimized to do that? So number 2, we really say be ready for a market swing at any time. We're in a global connected world. If you've ever read Nassim Nicholas Taleb's books, Fooled by Randomness, Anti-Fragile, the world gets more connected every day. And black swans, unexpected turmoil events, whether they be good or bad for our business, oftentimes they're bad because we're at the forefront of discretionary income, in the travel business. You see it around hotels, airlines, us are getting hammered. We just have to be ready for it at any time. It's COVID-19 now. It's going to be something else in 3 years. So no matter how good times are, you have to be ready for it. It's really simple. 3, and I won't touch on this too much, but it's just having the right partners. the right partners. And when I say partners, it's also your community, right? It's what you provide, Julian. In connecting with people, all of your levels of communication where you can connect with other hosts who are going through the same struggles. I'm also part of Eric Moller's, short-term rental legends. He's done a fantastic job of coordinating and collaborating with everybody and making everybody just feel like we're in this together. Okay, so let's get a level head and see how we get to the end of this tunnel. Number 4, and I said this in the beginning with our business, is creating cash flow redundancy. So redundancy is an engineering principle. You don't create any systems without fail safes. The stuff's going to hit the wall. Shit's going to hit the wall. Sorry for swearing. I don't know if that's allowed here. But it's like you have to just have all of your – so the 2 points are make sure you know your financials and that they're organized very well. So this is important, one, for good times, because if you want to get loans, good and bad times. If you want to talk to financial intermediaries and investors, you have to have your financials be ironclad in order to get loans or get capital. And then 2, you have to know what your monthly nut is. What's your monthly costs, and build in a 2 to 6 month reserve into that. And we've done that, and that's why we feel confident we're going to see the under end of the tunnel. If Corona lasts for 6 months a year, I think maybe we're all SOL. But I'm naturally an optimist. But when anything happens, you have to have these reserves on hand. Talked about this earlier too, so I won't get into it. But having the right strategic capital partners, it just allows you to take advantage of a disruptive playing field. So rather than just trying to survive, you can really thrive and take over deals, properties when everybody else is freaking out. So having that smart money. We talked about this too. Part 6 is marketing on multiple channels. The OTAs, Airbnb, VRBO, Booking, long-term rental sites like Zillow, Trulia, Hotpads, classifieds like Craigslist, social media like FB Marketplace, your local community, your local relationships, just spreading the word out, not being too dependent, because I think a lot of hosts got hurt by Airbnb and their stance, and it's really tough, but we're at the whim of that platform because we're using that platform. I don't want to say it. I don't want to say what they did was right by any means, but diversify that marketing risk. That'll make your business much more resilient. And lastly is just mitigating your portfolio risk. When we say this, we think about the 3 main ways that you invest in short-term rentals. So it's the purchasing a property, which is most risky, requires the most equity, managing a property for somebody else, which is the least risky, or master leasing the property, which is kind of the in-between. For us, we're doing a combination of all 3, and then when you integrate the right team and the right strategic partners into it, we feel like we've really minimized our risk. And, the greatest investors like the Sam Zell's, he's one of the best, they always say, focus on the downside. The upside will take care of itself. We always have to focus on the downside. So that's why we put mitigate your portfolio risk. So those are our 7 points. And our team created it. Our team really did a great job. My partner, Josh, created it just to help people during these times and really rethink. We've had an extended bull market for a really long time. No one knew when, but everybody knew, the ball was going to drop at some point. So now after everything settles, let's get back to it and let's be just that much stronger, using business principles like these.
Yeah, I really appreciate that last point. And again, for anybody that does want to, read this ebook, I'm going to be including a link in the description of this episode. So if you go to a show notes page, you can get that from Jeremy. But just to highlight a couple more things that you said, I really appreciate what you said about, during this time, like everything is going to, people are going to be able to do well when things are going up. It's kind of easy to trip on when everything is just going up that way. But focusing on where we are right now, focusing on that downtime, that's where we really need to be looking and finding those creative ways. I think that's a really positive perspective. One thing that I did want to roll back to that you said earlier was, these three models that we teach. We call it co-hosting, arbitrage, which is the asset light, asset heavy, and then you're purchasing. You said though that these companies like Saunders, Stay Alfred's, that they're actually acquiring these leases. You said that the numbers weren't looking right. Is there something that maybe us hosts that are coming into the space, because a lot of the listeners of the show do dabble in all three. The arbitrage asset heavy model is what we call it. But you said that these companies are doing something that is not what we're doing, because for us, we're trying to find those leases that are at market rent. But you're saying that these companies are inflating the price just so that they can acquire more properties, is essentially?
These VC-backed firms are very different in essentially two ways. I'll explain it to everybody. Number one, they're making deals with landlords pre-development. So basically, they're getting leases in place and allowing developers to build during an extended bull market where assets are priced very well. So when they take on a master lease, they're already paying a premium. New construction's expensive. Assets are priced very well. There's not really a good place to find deals. So two is that they are forced to grow. They are forced to grow due to their investors. So rather than getting smart deals, which you teach, they teach, just spray and pray. Let's pick up as many as we can at any one time. So we see a lot of their deals taking place in the brand new Class A buildings, which guess what? Those are the most expensive. And no matter how nice something is, if my property is better located and better designed and tailors to a specific traveler, say a business traveler because it's close to a convention center, I know I can make as much money, if not more money than them. So I know that they can't be pushing rates that much higher, and I see their rates and they're not. So their profit margin, their level of safety, their margin of safety is this. Rather than what you teach, it's like, okay, let's find good, smart deals. Let's maybe go to a redeveloped Class B building or a redeveloped Class C building where the rent is for a two-bed $2,000 versus $3,000. So you boom, right there with that deal, you've built in $1,000 of safety versus the VC players. But they do that because they're forced to do it. Their goal is market share. Most of our goals is profitability. Profitability separates, the professionals from the amateurs. So they've had different models. And I think, we're going to see, who's really swimming naked as this tide comes in. We've already seen, I've been competing with Sonder and Stay Alfred for a few deals down here in Chicago. And one of them has already pulled back on one of the deal. Like I've talked to the landlord and he's like, yeah, they pulled back out at like the 9th hour. They were just like, nope, we can't take on any more deals. And this was before Corona. Now that this has hit, I don't know. So it's just different, so that's why I really respect what you teach. It's like, let's do arbitrage, but let's just do it smart. Let's not try to take on, a $6,000 unit because it looks beautiful and cool. You can make it look beautiful and cool with your beautiful design. Bring in a professional designer, and make up for that cost, make it cool, and then bring in a professional photographer, make it pop. And it's going to look just as good as their brand new Class A building that costs 2 times as much.
So do you think that this model, because I never really thought of it that way, that, the investors are pushing them to really pick up more units. It's not, like you said, it's not about the profit. It's about the what's their market share. And when you're looking at these companies, you're seeing beautiful branding, you're seeing beautiful apartments, you're seeing, really expensive furniture. And everybody's looking at this and they're like, man, these guys must be killing it or something. But what you're saying is they don't care about what their profit is. They care about how much market share compared to everybody else it is, if I'm getting that correctly.
Correct. Yes. Well, they are forced to grow because, in essence, like the basis of a venture capital investment is, the investors want to 100x their return. So they're going to push their portfolio companies, i.e. the Saunders, the Stay Efforts, to grow as fast as possible, to build revenue as fast as possible, because they're seeing these Saunders and Stay Efforts make, X amount of margin because times are good. But, if we're being logical, we've been in an extended bull market for a long time. They're not going to be able to make this as long. And when Corona hits, it's going to be closer to this or maybe even negative. So it's, we don't know how sustainable it is. Hopefully, those guys are great guys. I've met some of them. I know how much, they spend on their furnishing and everything. And I think it's a little too much, but, they have big capital partners. I actually heard Simon Lehman. It's funny. He's one of the major, really, vacation rental guys, and he said about them, it's like they need unlimited cash to run their business through good and bad times. Just the fact how fast they're growing. So, Sonder has Fidelity backing them and some other people. Maybe they do, maybe they don't. But I think for the majority of these VC players, they're hurting a lot. And as not as much cash is liquid anymore in the market in just the major macro markets as it was, 6 to 3 years ago, they could easily turn over within a month or 3 months.
That's one of the things that even, John and I, we're looking at our business and we're saying, moving forward into the future, the majority of the portfolio that John has right now is this asset heavy master lease model. About half of it though is, the management co-host, asset light. So moving forward though, do you still see that there is potential for, us, we're not venture backed. We're bootstrapping it. We're trying to be scrappy, taking those, like you said, those B, C properties and really pushing the profit boundary. We're always thinking, profit first, rather than, quantity. Do you see arbitrage still being a profitable thing even during a downturn, or is it mostly just going to be focused on the co-host model moving forward if we are in more of a bear market?
In a downturn, yes. In a disaster, no. So we're in disaster epidemic mode. Nobody's traveling. So historically, I was at a ULI conference. Historically, travelers travel about 20, or the margin for hotel travel decreases about 25% when a recession hits. So people still travel. People still have to travel. There's really just, so you have to think about that. You also have to think about your types of travelers. Are they leisure? Are they business travelers? They travel for different reasons. Your business travelers are going to be more inelastic. They're going to travel more often because it's their work. Leisure is going to travel a little bit less. I think it absolutely can during a downturn, as long as you consider that 25% buffer. And as long as you're making smart deals, not necessarily rushing into these brand new Class A buildings because, they look super pretty. It's for the local guys, to your point about, our smaller not being VC, I think it's one of the only ways it'll ever work, because our business is about being hyper local, and providing a great service ongoingly. And when you're hyper local, you tend to build relationships with the local community, and you should know where you can find the best deals. And it takes time and relationships, and you have to add your value where you can. But I do absolutely think during a downturn, but not during a disaster like this. I think everybody's hurting.
Right. And that's why I appreciate you coming on here, Jeremy. Talking about those pivots, what we're trying to do, to be able to just make it through this disaster moment. But I'm really curious, where we're going to see in the future, this short-term rentals, they've been around for a while, but not like right now. We've Airbnb really came during this time where it's like they came right after, right after that kind of recession where people were trying to get more creative, find different ways to be able to save money. And now we have all these businesses, you, me, everybody that's been on the success stories. This is really kind of a first time for us to experience something where we're going to be going into this potential bear markets. So how we move forward is really curious. So I'd love to have you on, in the future, Jeremy. I think it's so cool to be able to see your progression, see where you're doing, and I love that you wanted to share with the Host Nation community your advice. I'll include a link down in the description as well for that book. Is there anything else that you wanted to share with anybody? Any words?
I mean, thank you for having me on, Julie. As always, you're great. And, this is invaluable for the people who are listening. We're in Chicago. We're also investing in South Florida area. If anybody is in those areas, our brand is called, you can find us on Instagram. We've pivoted. So I own a company, our investor company is called the Passion Group, PASION, only one S group. But on Instagram, we're Airbnb Profit Pros. That's where we're sharing a lot of our knowledge and know-how. It's Chicago Residents Club for our business, if you want to see it in action. So those are the two places where you can find us, or you can always email me at jw@chicagoresidenceclub.com. I'm always happy to chat and just help people. I mean, it's really hard, and I'm lucky to have really good partners and people and to talk to, like you, Julie, and thanks for having me. And, right now it's just a time that we all help each other, and, let's get to the other side and wait till these waters calm.
I appreciate it. Well, thank you so much, Jeremy. And until next time, Host Nation, keep on hosting. Hope you hosts benefited from the show. If you found value, please go on over to iTunes, leave us a review, and let us know what you enjoy about the show. If you'd like to talk to hosts that have been featured in these episodes as well as the community, go on over to our Facebook group, The Host Nation.